Hello, as the dust settles on yet another political earthquake, I'm joined by Dominic Rossi, Chief Investment Officer for Equities at Fidelity, to talk about Theresa May's failed political gamble. Hello, Dominic.
Hi.
Let's talk about the market reaction first of all. Was it what you expected?
Yeah, I think the markets have been clearly positioned for a Tory majority. And therefore the market's reaction, given we now have a hung parliament, has been quite predictable. Sterling has weakened, I think, particularly against the euro. It's gone through the 114 level for the first time this year. And the other markets, again, quite predictable. In the stock market, we see the FTSE 250 falling, and we've seen the FTSE 100 with all those dollar earners rallying. Interestingly, the gilt market, we've seen a reasonable steepening of the curve as there's been a flight to quality at the short end. But the long end, we've seen actually rising yields, presumably in anticipation of a lot more gilts coming down the road one day.
And the 250, of course, is the most domestic focused index, isn't it? And the 100 is more international. That difference is important, isn't it? Very,
very important. We saw it last year after the Brexit vote. We saw the FTSE 100 significantly outperform the 250. Again, an exchange rate ridden event there. We're seeing a mini version of that today.
Okay, so what do you think might be the sort of major consequences of the election that we've just been through?
I think there are going to be several. I mean, first of all, I think it's quite likely that that Theresa May is going to limp on as leader of a coalition, principally because nobody else wants the job. If you're a Labour Party, and we'll come on to the Labour Party, they're quite happy to be a strong opposition for the foreseeable future. And I don't think there's anybody else within the Tory party who would like to trigger a leadership election, given the fact that the negotiations over Brexit will only start next week.
And all eyes, I guess, on Brexit at the moment. Is that the biggest consequence, or are there domestic issues as well?
I think there are domestic consequences which are just as important, and this is probably the reason why the outcome was what it was, rather than what we thought. The Tories view this as a Brexit election. That's how Theresa May positioned it, and what I think Jeremy Corbyn uncovered was that actually austerity was just below the surface. And what this election result signals to me is the end of austerity. Now, in one sense, the Tories had already signed it off because they had kicked the can with respect to balancing the budget down to 2025, but they were still politically playing lip service to a fiscal discipline. Given the political landscape this morning and Corbyn's success with his tax and spend approach, it seems to me that the politics of austerity is now a thing of the past.
So do you think that the Conservatives misjudged a shift in sentiment about austerity in the country?
Yeah, definitely. And I think when we go into another election, which I'm pretty sure sometime in 2018, before the Brexit D-Day, there will be another general election, and I think the Tories are going to have to move off the fence with respect to their fiscal plans. They're not going to wash in the country today.
Okay, so if you're an investor and you look at the situation we find ourselves in, much greater uncertainty, how should you position your portfolio accordingly?
I mean, a story is unfolding, right? It's been unfolding over the course of the last 12 to 18 months, that and that is that there is an absence of leadership in the United Kingdom. We're a country without a government, really, without an economic model as well, and with an economy which is weakening, and with a current account deficit still of 5% of GDP. If you didn't call it the UK and you called it something else, you'd say that that currency has to be a weak currency. And we, as investors, for the last 25, 30 years, have grown accustomed to sterling being a relatively strong currency, a store of value. And I think we're entering a period of UK financial history where sterling will no longer be a strong currency, a store of value. And therefore my sort of encouragement to our clients and investors is you need to continue to diversify away from sterling-based assets within the UK equity market. That's obviously the FTSE 100, but really you need to think beyond these shores to protect or grow your wealth.
Dominic, thank you very much indeed.